I think we're live. Good morning, everyone. As you guys know, I'm Courtney, and I'm a local realtor here in San Diego, and I'm really excited to bring on our very next guest, Daniel Lehman with SunWest, and I'm really excited to talk about the VA mortgage and the VA loan. It's got some misconceptions, but it also has some really unique things that can be done. So we're going to talk a little bit about what the VA is, or the VA loan, what it is and how it works. We're going to talk about some loan hacks, and then my favorite part, we're going to talk about how to buy an investment property using the VA loan and put 0% down. So Daniel, thanks for being on and chatting about this today.
No problem.
Yay. Okay, awesome. Well, let's jump into the first topic. So how does the VA loan work, and who's eligible for the 0% down payment?
So I guess the first thing to say is the misconception is that the VA loan is done by the VA, and it's not done by the VA at all. It's done actually by banks, typical banks, your Navy Feds and your USAAs and us and everybody else. We actually do the loans. The VA just provides a guarantee. So what ends up happening is the main benefit of the VA loan is you don't have a down payment requirement. You don't have mortgage insurance even with the down payment requirement, because basically the VA is saying, hey, if this client doesn't pay, right, or if there's a foreclosure or something like that, the VA basically provides that level of protection of 25% of that loan to the bank. So the bank's comfortable giving that money and being in those circumstances, because basically the VA, on accounts of the veteran's service, and we can talk about eligibility, but on accounts of the veteran's service, and eligibility, they're able to do that to get that guarantee from the VA. So the bank ultimately does the loan.
Yeah.
And the VA just does a guarantee on the loan. So that's kind of the main element of how the VA loan works.
Mm-hmm.
So we can maybe talk about eligibility too.
Yeah. So who's eligible, in order to get the 0% down payment? I know there's some nuances, but maybe you could help clear those up for us.
So there's the question of who's eligible for the VA loan itself, and then there's the question of how are you eligible for the 0 down. So maybe I'll address the who's eligible.
Okay.
So in terms of eligibility, the basics are, if you're active duty, it's 90 days active duty during what would be considered wartime, which I think at this point is anything past September 11th if you have 90 days active duty. It's 180 days off the top of my head for what am I trying to say? 90 days active duty. With 6 years reserve service if you're not.
Okay.
Oh, it's 180 days if it's non-wartime, which is kind of not even a thing right now.
Yeah, I got it.
Sorry, a lot, slipped my mind. So, or if you're a reservist and you're activated, so sometimes people will be a reservist, they're doing their thing, and then something happens, they get activated for 90 days during wartime. Basically, they become eligible. So that's eligibility. So eligibility is not the same thing as qualification. That's another one of the misconceptions, right? It's just because you're eligible doesn't mean that you're qualified. Qualification is a function of income and credit and assets and that kind of thing. Eligibility is a matter of service. So the next kind of part of that is there's some misconceptions related to who can use it. So obviously, when I say veteran, it's active duty and veteran. So the veteran, meaning active duty member or veteran, can use it. The veteran and his or her spouse. So the spouse is one of the only people that can go on a VA loan without being a veteran themselves, because sometimes people ask us can my dad go on the loan with me? Can my sister go on the loan with me on a VA loan? Can my fiance? And there are certain little in the weeds kind of ways that those in some circumstances can work, but it's very atypical. And it has to be approved by the VA. But the main thing is that if those people aren't veterans, they can't go on the loan with you, right? So that's kind of so it's mainly the veteran spouse, a veteran, two veterans can buy together, or in certain circumstances like a fiance or something like that, some very close relationship, you got a veteran and a non-veteran. But there's a lot of problems, not problems, but there's a lot of hoops to jump through for that.
Yeah.
And also the surviving spouse, if someone was killed in service or was or passed away due to a service-connected disability and that kind of thing.
Okay.
So, like, who can use it?
Got it. I know I've seen something happen before where I was not representing them, but two people who were going to buy, they were engaged and they were going to use this VA loan. They needed the soon-to-be wife's income. They were engaged at least, but they were about a week away from closing. And all of a sudden the underwriter comes back with, "We need your marriage certificate." And they're like, "What? What?
Yeah,
marriage certificate?" So they had to go to the courthouse and get married.
Yeah, that should definitely not be an all of a sudden thing. You know, that's
I know, right? It's like, whoa. So that's something that was important to know in advance.
That should be addressed like way on the front end. And it's atypical because in those circumstances, some loans require VA prior approval. So it's like, if you know anything about the VA, you know, it's like the reason why the VA loan is so efficient is because, again, the banks are the ones doing the loans and we just get them guaranteed after the fact.
Yeah.
Anything where you have to like send out to the VA, whether it be like an appraisal rebuttal or something funky like that, it's like, generally speaking, it's not a super fun process. Although the VA home loan side is better than other elements of kind of VA historically. Okay.
So basically the VA is a 0% down payment mortgage. Anyone who's active duty, and I know the 180 days kind of slipped your mind because, I mean, since 2011, we haven't had to care about that. Or sorry, 2001, we haven't had to care about that. So we've got at least 90 days in, or a veteran, and that's basically it.
Yeah, well, I'll say too, like the way that you check that is relatively easily. If someone wanted to check their eligibility, what we do is we plug in their social, their year of birth into a database that we have access to, and in essence, it just comes up with generally an automated certificate of eligibility that shows, you know, a number of things on there. But do they have a loan outstanding already? You know, are they eligible? Are they exempt from the funding fee, which is a whole other topic, that kind of thing. And the question of 0%, like who's eligible for zero down? So we kind of like talk about zero down. The reason why zero down is okay, like I said, is because the VA does the shadow down payment, or the shadow, like all banks require security in the sense that if you don't make your payment, I'm trying to like get into the window here. If you don't make your payment, the bank wants to recoup their investment. So there has to be some kind of a security. And generally that takes part, when it's not VA, of either a down payment creating that security, or down payment in conjunction with mortgage insurance, which is an additional cost. What the VA does is, based on your eligibility, they say, okay, 25% is what we're going to cover. Therefore, the bank doesn't need that down payment. They don't need you can always put a down payment, right? But they don't need it. So in January, there's a change legislatively that it used to be up to the county loan limit. You could do zero down up to the county loan limit. Now it's completely changed, and you can go up to whatever we want. We have our pre-approval out for a $2 million purchase in LA, which isn't super typical. Generally, we're working with young families and stuff like that. But we've got, you know, there's a guy who is a surgeon and he's got VA eligibility, and so he'll buy a $2 million property with nothing down. He still has to make a good income. He has to, you know, do all that, and he'll have some rate increases probably because of the size of the loan itself. But it's still like it's possible now. It used to be you could go zero down up to the limit, and then you'd have to put a down payment. You know, and now with the VA loan, it's not like you can go around the country doing zero down on $2 million properties. Once you tie up your VA, a down payment may be required, or you may not be able to use it again until you sell that property or refinance that property and free it up. So there's complexities to it, but it just depends on. I mean, generally what happens is we have people come in and we speak to them specifically about their situation and kind of build the plan from there, as opposed to it being like a one size fits all kind of thing.
Yep. And you made me think of something else that we've talked about before. So, you know, have service, be eligible, but you don't need to have perfect credit either. That's the cool thing. You don't have to wait till you can buy it, you know, you're a surgeon and you've got everything in order. There's plenty of options in between. And so, yeah, that was another thing that we were talking about. You do not have to have perfect credit. They have some requirements in general, banks do, but, you know, if you've been in the military, if you are currently serving for 90 days or more, it's like, let's chat. You know, the interest rates right now on VA are just blowing my mind. They're so low. It's amazing.
You know, and about credit, VA itself doesn't even have a credit minimum. They don't have that. They leave it up to the bank. So some banks have. So the banks basically have a credit requirement. Yeah, so
I guess that would kind of go to say that if somebody applied at one bank and they got rejected because their credit was low and they're trying to use their VA loan, like maybe there's an opportunity to find a different bank that has a different overlay.
Yeah, and what I would say is most banks don't do any planning whatsoever. So the question before that is what's affecting your credit and what can we do to improve the credit? And can we, instead of band-aiding it by finding somebody willing to do a low credit loan for you at a higher rate, is there some simple fixes? Are there some simple fixes that we can do on the credit side to make your credit better overall and just put yourself in a better financial situation overall, as opposed to, and see it as much more of like a holistic deal as opposed to some, so my team, so the Lehman Group, that's what we do, is see it much more as an overall financial picture than we do just a loan kind of sitting out here in space.
Definitely. Okay, cool. Let's move on. Whoops, there we go. VA loan hack. So let's chat about this. Well, I was going to say one thing that came up, and you mentioned it earlier, I'll start us off on this one, was I've had a client say, well, I don't want to use my VA loan right now because this is not going to be my forever home. And I was asking him why that was significant. And he said that he thought he can only use it once. So this one is more of like a misconception rather than a hack. But you can use it. There's all kinds of other stuff that we don't necessarily need to get into on how it works. But the good news is that you can use your VA loan multiple times throughout your lifetime.
Well, some of them, a couple of misconceptions related to that are number one, you can use your VA multiple times. And number two, you can even have two VA loans at once, depending on how much you use. It's almost like I kind of describe it as like almost like your eligibility as like a rechargeable battery, right? So with a rechargeable battery, you use it all and then you charge it back up. So if you bought a big old huge house, this guy buying a $2 million house is going to use all his eligibility. I shouldn't even use this guy as an example because it's not a good example. Someone using their VA, they're going to use up a portion of their eligibility. If they use all of it, it's used until they pay that loan off, whether it's refinancing or selling it or whatever. Once that's sold, for example, you can reinstate your VA and go use it again. And there's some things to consider related to the funding fee and to mitigate some costs related to using it over and over. So those are all kind of planning questions. But the other thing that people don't understand is, let's say somebody bought a house in Virginia and they only bought it for $200,000. Only a portion of their eligibility is tied up. So they can come out here and they won't have full eligibility like someone else who has it free would have. But what they do have is a large chunk of their VA potentially available for another purchase. So we can kind of do a calculation of what their maximum with zero down would be in that case.
And you just mentioned something called the funding fee, which is, a one-time fee for new VA or for VA buyers. But one of the loan hacks that we can talk about that you've brought up before is how to get that waived. You shared before that there's, with me, offline, that there's some ways that you can actually get that fee waived. And that could be like $10,000, $20,000, depending on the size of the loan. Yeah,
so the way that your funding fee is not the only real way. I mean, there's a service-connected disability waives your funding fee. So if you have service-connected disability, obviously if you're active duty, that's not super typical. There's some other things related to Purple Hearts and stuff like that. But the main thing is service-connected disability waives your funding fee forever. So if you have any 5%
down, or 5% down, 5% service-connected disability, it would work. Or
you could say 10%. I think the most accurate way to say it is if it's service-connected. Because there are certain circumstances, I think, where it's under. The prevailing kind of knowledge was basically that if you're getting a check, that's at least 10%. If you're getting a check, then it's service connected and you got it waived. Generally speaking, I don't use that as much. Generally, we'll pull it and just see if there's, because I think there's probably exceptions to that, and I just don't want to be. I want to be like precise about it. So using the term service connected disability is probably the best way to do it. and not and again, pulling your certificate of eligibility to make sure that that's validated. Because there are means by which like someone with ringing in their ears can be 0% disabled, where they get some kind of medical benefits or something with a VA that's outside of, but they wouldn't be eligible for the funding fee to be waived. So the funding fee can be significant. So we bought our first house in San Marcos, and we bought our second house in Carlsbad. Because there's service-connected disability, we didn't have a funding fee. I mean, our place in Carlsbad, we would have paid probably $30-something thousand in funding fee that was completely paid. The other thing about that, sometimes people are like, look, you know, I'm waiting on the VA to get back on I don't want to buy it until I get my service connected back. It's all backdated. So what happens is if you apply for service connected disability with the VA, buy a house, pay a funding fee on your loan, and then close later, and then get your service connected disability awarded after the fact, retroactive, that could potentially be refunded to you. So you can get it back. And I'm not sure the logistics on how they're doing that right now. I don't know if they're like actually leaving the balance on the loan and sending a check of some sort, or if it's not something we run into a ton. But when people have a legitimate, sometimes we'll talk to people and they're like, oh yeah, you know what? I've been meaning to go and like get this rechecked out. You know, it's like, we'll say, hey, we'll do it now, get the date stamped in the system so that we know after the fact, if you buy, you at least have a chance of getting it back.
And we kind of skipped on something too. We mentioned it a moment ago. You're like, oh, you're talking about yourself. One of the things I love about working with you as it relates to helping, you know, VA buyers is you yourself are a Marine veteran and have gone through a lot of this yourself too.
Yeah, I'm not one that subscribes to the notion that you have to be a veteran to be able to help veterans well. Like, I think there's a lot of people who aren't veterans who do a lot better for veterans in a lot of cases than some veterans do. There's veterans out there that completely screw over other veterans just like anything else, you know. But I think there is an element of
relate. What's that? You can relate even more, I think, and that's really kind of nice. There's
an element to that, of being able to relate it to people and understand kind of like what's going on in those circumstances. I think probably like probably more so than just being in the military, getting out of the military with nothing and having to learn all this stuff on my own is probably more something that I relate to people with, you know, in terms of trying to get them to the point where they're financially kind of more empowered. I connect to that quite a bit too, you know, but yeah.
Great. And one more thing to say is the funding fee doesn't have to be paid out of pocket. So that was just a little thing I was thinking about as we were chatting earlier. You can roll it all into the loan so that you don't have to, you know, so $30,000, you don't have to say, oh my gosh, I don't have $30,000, I can't go buy a house.
Oh, and I should say, like, our place was our second place when we bought it after we sold our first one or after we rented out our first one, and when we bought our second one was a pretty large purchase, right? So $30,000 isn't a typical funding fee. It's like it's not that large if you're buying a smaller property or more reasonable property. It's just that was the situation. So probably another bad example, but
that's all right. Examples are helpful still. So maybe $10,000, but this is all the kind of thing that if somebody's interested in learning more because this video piques their interest, then, you know, the simple answer is yes, there's examples that are on the crazy high end, there's examples on the low end, but what's most important is to get a one-on-one discussion going, because that will apply towards, you know, your specific situation. And the cool thing is, if you're watching this, you're like, wait, okay, I can get 0% down. I don't have, like, interest rates are really low. This might be something I'm interested in doing. It's super simple, and there's no cost to talking with Daniel to evaluate, you know, the options that you have. So that's the good news. Yeah. All right, let's go on to the last part here. This is a kind of a fun one. How to buy an investment property with a 0% down payment. Because normally it's 20% or 25% or maybe even more to have an investment property. But you were sharing with us lately or more recently about this really cool approach to kind of building wealth using the VA loan to kind of maximize an opportunity.
Yeah, I shouldn't say how to buy an investment property per se, because it's technically not an investment property. Technically speaking, like, VA is only available to primary residents. There are really 3 classifications of occupancy of a property. You can live in it, primary residence. You can have a vacation home or a second home, you know, where you don't use rental income, but you go there, you know, and it has to be reasonably distant from where you're at and that kind of thing. And then there's an investment property. VA and FHA, the government loans, VA is specifically for owner occupant. So, but what you're saying is absolutely accurate. And a lot of times, for example, we'll have clients come in and they're like a couple, like a young couple, no kids, no dogs or anything. And they're looking for a condo. They're like, hey, we want to buy a $350,000 condo, but it's got a $350 HOA. And I'm like, okay, so number one, you got 350 HOA. Number two, you got a situation where that condo has to be VA approved, so that maybe limits your availability because condos have to be VA approved with VA. And they're also like kind of investment minded, and they're like, they want to buy because they want to kind of start investing in real estate long term and start building like alternate investments and that kind of thing. And it could potentially be an option. And so getting to the crux of this real quick, it's like basically if you can purchase with VA, 1 to 4 units is considered residential property. So if you lived in one and you rented out the other 3, that's considered owner occupancy. So you get an investment property kind of benefit and rental income off of the other units. And as long as you intend to occupy one of them, that's considered owner occupied, and you can do that. So that's kind of what like if you jump on bigger pockets or anything like that, that's like what people would consider house hacking, is like buying a multi-unit property, living in one of the units and renting the others out. So we have clients that put that. I mean, it's tougher sometimes for like agents like yourself, you know what I mean? It's like, and that's why sometimes I'm kind of like, oh, should I even bring this up? But because it may be tougher to find those properties, but then you don't need condo approval. You don't have an HOA, and potentially you could end up spending less per month than otherwise because the net rents that can be qualify on the loan help cover the cost. So
yeah, so that's what you're saying. If you guys are going to factor in what the rents will be and allow that to apply towards the qualification factor. So it's not like, okay, so now I wanted to spend $350,000, but now I have to look like I can afford $1 million. I don't know, I'm just throwing a number out there.
Yeah.
No, I don't have to look like I can afford $1 million. I have to look like I can afford what I can afford. And if the rest of the numbers for rent make sense, well, now I can use that rental income as income to show my qualifying factor, being able to work with $1 million property. And since the VA loan is 0% down now, without any, maximums or limits, now you can still get in at a good price and have an opportunity there, and you're building it. And you said you have to intend to occupy. So you live there. It's not forever, or you have to refinance and put 20% down. It's for a reasonable time, I'm sure, right? It's a reasonable time.
Yeah, it just has to make sense that you're going to occupy it. And I would say, one of the biggest concerns that active military people have is like the concept of potentially having to PCS move or having to deploy. And so if you've got a condo, where you're paying on 1 unit, your rents per unit are going to be lower than if you have 4, where you're much more likely to positively cash flow if you have to go somewhere else, right? Because something does change and you do deploy or you do something reasonable, you can rent that other unit and get a lot closer to making money on it. The other thing is, and it's not a strategy for everybody, but if I control a $300,000 asset or I control $1 million asset, and the appreciation is 5% on each, the means by which your value improves on $1 million property versus on a $300,000 property. I know it's more complex than that, but you're controlling a much bigger asset, and that could potentially be useful financially, like long term.
Yeah, that's awesome.
Yeah.
So just some new ideas, and it's nice to have options out there to, make sure that people know what they can do. And I think knowing your options is the most important thing to making good decisions. So I love that you kind of approach that in a way where it makes sense when someone kind of seems like they are open and interested and they're talking about, oh yeah, well, I want to invest. Now you can introduce that idea of investment earlier on. Right.
Yeah, even then, too, like you don't have to be buying a fourplex. That like if I always say it to people, it's like everybody looks at the risk of buying, and they absolutely should. Like you should absolutely be educated on the pros and cons of actually buying, but few people look at the risk of not buying. So you've got people on base that are paying over the 3-year period in time that they'll be here. They'll lose 120,000 in BAH in housing allowance, or they'll pay rent in the amount of 120,000 that they're guaranteed to lose. That's a guarantee. So there's an inherent risk of renting also. That doesn't mean go out and be stupid and buy something that you can't afford and put yourself in a bad spot, but it does mean make sure that you have a plan together to in an informed way analyze your options objectively. And that's kind of like what we specialize in.
Yep, definitely. Love it. Well, thanks so much for all the great knowledge and kind of helping us understand what the VA loan is, how it works, you know, some misconceptions and loan hacks, and then ultimately how to, you know, maybe leverage what you have with the VA loan in order to, you know, invest in more than one unit to kind of, you know, make a brighter financial future, you know, maybe even earlier on. So thanks so much again for all the info. And for anyone listening, if you guys have questions, please put them in the comments or reach out to me in any way, and I'll get you connected with Daniel. Super helpful person. Like, as you guys can tell, he's full of knowledge, and it's free, it's easy. If you have a family member or a friend who you know will be eligible or you think will be eligible, we'd be happy to help. So that's about it for now. So have a great rest of your Friday and take care. Bye.
I am so glad that you watched all the way to this point in the video because I'm happy to help raise your real estate IQ. I hope that you've enjoyed this video, and I wanted to take a moment to invite you to check out the description below for helpful resources and to download a guide that can include things like tips and checklists to make planning for your move even easier. It's honestly never too early to get started. If you like this video, please be sure to hit subscribe and turn on the bell so that you can get notified when we share new real estate videos each Thursday. You'll also want to check out the thumbnails that are about to pop up on the screen for other videos that we've custom made for you on this channel. And as always, this info is for people everywhere, but if you're looking to make a move to the San Diego area, I'd be happy to be a resource. You'll find my contact info in the description below. So have a great day, and I hope that you love where you live. See you guys in the next video.